The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're going to start out the show with the German DAX like we usually do. And as you can see, you know, we've had some really interesting symmetry. We gapped up last night a little bit when crude oil opened $2.50 a barrel higher. On the OPEC, non-member OPEC's folks are telling you they're cutting back production. And now we've broken out above that $52 a barrel. That's certainly a valid breakout, folks. As long as we don't get below $52 a barrel, it looks like we're going higher in the oil. Let's take a quick look at what's happening around the world quickly through Barron's Magazine. Oh, by the way, we're going to have Arch Crawford as my guest at the half-hour break here. So we'll have him on, which will be interesting. And then tomorrow, hopefully, we're going to have Byron Tucker talking about ETFs. And he was just at one of the big ETF meetings where they do all this stuff through BlackRock and all these other places. So he's got some really great information for us. Hopefully, we'll have that tomorrow. Now, on the Barron's, if you'll notice the headlines of the newspaper, it's saying Dow 20,000 folks. When these things hit the newspaper like this is not a beginning thing, it's an ending thing. They have a tremendous ability for timing, so watch it very, very closely. If you remember when Princess Di died, she was on the cover of Time magazine, I think for the second or third time. Also in 2000, the NASDAQ, we had three papers, Business Week, Time, and U.S. News and World Report all had NASDAQ 5,000 on the cover in March of 2000, which was the high of the market. So this is telling us that, well, as if we didn't need to know this, but there's been an emotional market going on here. So we'll see how this is going on. But as you can see from this German DAX chart that we looked at, it has a very interesting pattern. And I want to show it to you because you're going to see it two different ways. First of all, as we look at it here with the DAX, you'll notice that those three highs that we have, and the last one, of course, being that 1.618 expansion. But if we go just across the pond a little bit into the U.S. market and we take the Dow Jones, and you're going to see the exact same pattern occurring here in the U.S. market too. Now, whether this means anything or not, you know, we have to watch. But we do have several ABCD patterns here in the Dow coming up here to this 19,700 level. And we'll watch it closely in here because we have had a tremendous run. In the last 25 days, the Dow has been higher. I don't think we made a lower low, closed on a lower low in any of those 25 days. It's been up 23 of the 25 days. We only had 2 days in there. I think we're at, there might have been, I think there's 3 days that it closed lower and only marginally. So it's been a, you know, a one-way run here for quite a while. So we'll watch this very closely. I really believe that this Time magazine article really does mean a great deal. Now, from my perspective, one of the main things that is happening that is extremely important is what's happening here with the U.S. dollar and the euro and stuff, because we are at such a critical level here that it's just really amazing, because the euro went down and tested that 105 level one more time. And we got down there to 105.25 last night. That was just a slightly higher bottom than the one 3 weeks ago. Excuse me, slightly lower bottom than the one 3 weeks ago, and we've since rallied 100 pips overnight. Now, this was really quite amazing to some people because it held that 105 level one more time. And this is the key to watching this, is because it's such a powerful number. Just because we rally 100 pips, it doesn't really mean very much. But if we take a look, I'm just going to show it to you here on a weekly basis, because I think this is what you really need to be watching. As you can see, this pattern that we're looking at tells us that we're most probably heading down to that par level that John Logan talked about on his program this morning. You'll notice at that point we're going to have a butterfly pattern forming. It's going to be a 78% retracement of the low we made back in 2000. So this is what it looks like. That this is what it wants to do. But you do get these big rallies. Now, a lot of you think, well, $1,000 isn't very much. Well, it is when you're trading Forex, because you have these tremendous swings that you see. And this is what we're seeing right now in the euro. We went down and we tested those lows, and then all of a sudden the market just turned around and rallied, $1,100 in a matter of about 5 hours. So it's telling you that there's major support there. The way to handle this is to watch it at this 105 level, because look what happened to crude oil at that $52 a barrel level. We were mentioning this last week again, and we also did it on Friday, because it was such an interesting thing. The reason why I'm showing you this is just the these are the technical things that we look at. This is one that I talked about in the newsletter, and you'll see here the resistance that we had at $52 a barrel. You notice that we closed at 51.48. There should have been strong resistance at $52 a barrel, and look what happened. We gapped up to 52.51 and a dollar a barrel higher, and we immediately ran another dollar a barrel higher, telling us that we're most probably looking at $63, $64 a barrel in oil. Now, heating oil had already broken that high out. In other words, the strong resistance that was there was already shattered by the heating oil market. So now the $64 question, does it go straight up from here? Most probably not, but watch it if it comes back and test that gap area at $52 a barrel. That's going to be a really key level, because old resistance becomes support, especially when you gap above it. So this is something to keep in mind here, because we got a potential for a really big move here in oil. Now, on the other side, being the devil's advocate, if this thing is a false breakout, the one thing that you will do is you will see a print of $51 a barrel. In other words, it'll give back more than 6% or $3 a barrel. Then you would be looking at a false breakout, and then the market's going to go back into this resistance area, into this trading range between 51 and even possibly 43. But right now all systems are go in oil. I mean, it's just literally has popped up above there, and not only that, but it's stayed above it all night. This occurred at around 3 o'clock in the afternoon, New York time. Let's see, 5 o'clock in the evening, New York time yesterday is when the oil market opened, and it gapped up because of the non-OPEC members were, saying we're cutting back production by 500,000 barrels a day. Also, that was the news behind it, and of course, as we already know, that it shattered the resistance level that was there at $52 a barrel. Now, since we were talking about the U.S. dollar, we're going to have a break here in a minute. We want to take a quick look here at the gold market, because gold had a really interesting pattern here. We'll be right back. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, the next chart we're going to look at here is the gold chart, and what I've done is I've moved it down so that we can see the last 3 weeks of the action. As you can see, the last night's low at 11.52 was a perfect 1.27 of the previous swing. We've already rallied $13 an ounce since that bottom came in, and the $64 question is that a 3-drive pattern? And yes, the answer is yes. So we need to watch that. But I really think the most amazing thing that's happening in the precious metals market is the divergence between what we're seeing in gold and what we're seeing in silver. The next chart that I'm going to post up for you today is the silver chart. Basically, what I've done is I've gone to a 4-hour chart so we can see the last 3 weeks without too much problems. We can see our major bottoms. You'll see that we bottomed here on Christmas Eve. We also made a higher bottom. That was Thanksgiving, not Christmas. And then we made a little bit higher bottom back on December the 1st. And then last night, the market pulled down to this $16.80 level and has turned, to turn strong. But look at the difference between what's happened with silver and what's happened with gold. These have a very, very high correlation, folks. And when you see the drop that we've had in the gold market, by far below the old lows, you can see that there's something really big happening. Now, whether this bottom in minor bottom or whatever bottom was today in gold, that could turn out to be the bottom, but we've had a tremendous difference between silver and platinum. They've backed off just slightly, especially silver. Silver is the one that looks the most bullish of all because of the fact that it's had higher bottoms, and when it turns very, very quickly, to the upside. We're trading above $17 a barrel now. Let's try that again, $17 an ounce. So that would tell us that this most probably is going to be a pretty good move here in both gold and silver coming off this low. Now they are related to the U.S. dollar. There's no other way to really look at this. But the main thing that there's a lot of main things, of course, but one of the things that you want to watch with this U.S. dollar is the fact that it does, follow these patterns, extremely well. But what you have to be able to do is you have to be able to see how they work. Now, in relation to other commodities, and this is another one that I wanted to show you because it has such a high correlation, with the dollar index. And this is the chart of gold over the U.S. dollar index. The difference is this gold chart is inverted. That gold line that you see is actually the price of gold, but it's inverted. You don't see the correlation unless you invert this. And so what it means is as the U.S. dollar rallies, gold goes down. So if the U.S. dollar has made some type of a top up here at this 102 level, equivalent to basically 105 in the euro, that's telling us that there's a possibility that, yes, gold could rally and change. But it's not related to the gold market, in my opinion. It's related to the U.S. dollar and the euro. And the reason for that is they are thousands of times bigger than the gold market in volume and capitalization or any other way you want to mention it, because the foreign exchange, that's real money, moving real stuff. So you have to pay very close attention to it. But the fact that this correlation exists, and it has for quite some time, deserves our attention, because what we've done now is that we've made a potential top up here in the U.S. dollar, because the fact that the euro could not get below the 105 level. That's a very, very interesting thing. And now if we look at another component in the dollar index, which is also one of the larger ones, and that is the Japanese yen versus the U.S. dollar, you'll notice that this one last night, actually it was last night, about 5 hours ago, we made a perfect 1.618 expansion of the move that we had from December 1st to December the 5th. And you'll notice that 1.618 expansion stopped at 116.10. The high was 116.12. That's only 2 pips away. And we've already backed off about 70 pips or $800 just in the matter of the last few hours. Now, whether this will be enough to turn the index down, but the fact that it hit that level and backed off, I think, is very, very important. As we know, the 1.618 level is the most important level in all of these patterns that we see, because once we go beyond those levels, you really don't have any place to suggest where the market could be going. It could be going to, 2.618 or 3.14. It could go anywhere. So 2.6 or 1.618 is such a key number that we have to be able to watch out what's going on. Now, one of the commentators today on Bloomberg was saying that the huge breakout that we're having in the Chinese market is very, very constructive to the U.S. market. Well, the U.S. market doesn't need a whole lot of help, folks, as you can imagine, what we've seen here. But if we take a look at the ETF for the Chinese market, you'll notice that all we've done now is to go back and test the 61% retracement twice, as you can see over the last couple of weeks, and we haven't got we need to get it above that 38 level, and then you've got a chance for this market to break out. But frankly, it's completed the major Gartley pattern back there at 39. We backed off to about 35. We're trading at 37 and change right now. So this market is certainly not broken out to the upside like they're trying to tell us in the news. It's just, this is not what's happening. So you have to pay attention to what they tell you in there, because a lot of the news items are certainly, not very constructive to your health. Now, we do have another one here that's really interesting, and that is because we've got the Federal Reserve is coming in here tomorrow. I believe it'll be, no, wait, Tuesday. It's Wednesday we have the Federal Reserve meeting, but we've got this potential forming here in the, this is the Treasury notes. This is the March contract, and as you can see, we're down at this 123 level. This is incredibly important because of the fact that we're right at a 78% retracement. It's a Gartley pattern. And believe me, folks, there is nobody that is not expecting a rate increase on the 14th. I believe on Bloomberg this morning, they said it was 100% given that they would raise rates. The question is what was going to be said in the notes of the meeting, and then also how much, how many more rate cuts are coming. But rates have been going up since December, as we all know, when we made those huge tops in the bonds at the 177 level. So those are things that should be happening this week that will be adding a lot of volatility to the market. If we take a look at this, take a quick look here at this Treasury bond market, you're going to see on a technical basis it is so oversold. We did get down to the 147 level. That is almost spot on to the 61% retracement. We hit that about 3 or 4 hours ago. So watch this level at 147, 146.25 because it's got a lot of numbers coming in at that point. You're going to have a 61% retracement for the low of 2014. And it'll be very, very interesting to see what happens. This will probably be hit after the interest rate is increased. But if you look at this chart closely and you see these two 1.618 levels, that's telling you when the market topped back in July. Arch Crawford in about 4 minutes, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Arch Crawford from Crawford's Perspectives on the line. Arch, how are you today, my friend?
Well, terrific to be this hour of the morning.
Daybreak just barely comes at this hour of the morning here in the desert. So
right. Well, it's 9:30 in New York, but
yeah. Well, thankfully we're not at 27 degrees like they are there. That's a good thing, I think.
Well, I'm leaving. I'll be in North Carolina Thursday night.
Ah, well, that's great. You going back to see the family and stuff?
Couple of weeks, yes, through Christmas.
That's great. That's a beautiful area. I love North Carolina and South Carolina, both of them. Sam, what do you think about this article that was in Barron's this week, where it said Dow 20,000? That usually in history it shows us that that's usually pretty close to some type of a top, wouldn't you think?
Yes. Something is sometimes it fails to get there, and sometimes it ticks like 1 or 2 days above it and then tanks. So it's hard to say. It's got another 230 points to go.
Well, that's nothing in this market. I mean, it made 200 points in the last 2 hours of trading on Friday without any trouble at all. I mean, to me, it looks like a short covering rally because there's been no corrections in the past 25 days that makes it a, tremendous outlier event. Frankly, I haven't seen anything like this since, I think back in 95 or 96 when the Dow was, trying to make 10,000. So we'll see what's happening.
Well, I remember 10,000 was tough to get through. Didn't it stop like
oh, yeah.
three
it
times
stopped
before it made it?
Yeah, it certainly did. It certainly did. And then, of course, it went above it. Now, I'm looking at your newsletter here, and I wanted to post this first part of this to let the folks let you talk about this skepticism that you're seeing across Europe. You want to talk about that just a little bit?
All right. The thing has been that Europe itself has been getting worse and worse. And I predicted Brexit in the newsletter, and I said that I thought that England or the Great Britain would be better off while the EU sank. And with the happenings in Italy and Spain and Greece and whatnot, I think that's going to be accurate.
Well, it makes sense to me. Sam, I've got the 4 charts that you posted in there with the S&P, the Dow Jones, the NASDAQ, and also this bond market chart on a weekly basis. Do you want to discuss those for a minute? And then when we're finished with this, we've had a question from one of our listeners about one of your favorite commodities, and that's gold. But let's cover these stock indices that you talked about.
All right. Well, for instance, I've had a difficulty the last 2 issues where I got sell signals on the number of new lows being over 40 for 3 days, and then right as the next day the market takes off on the upside, which looks like some people know that was a short-term sell, and it could be manipulated against the people who follow that, which is a bunch. It's not everybody, but it's a bunch of people are familiar with that particular. So so we had this crash on the election eve where the Dow went down, was it 835, maximum 5% at about 12:30 that night. Since then, we went up 9.5% till this week or last week, I forget, the 9.5% from those lows. So it's been quite a run, and although the number of new highs has improved, the number of new lows has gone up as well, and it is, but not by any means a lock win from the technical side of things. Mm-hmm. Don't you think?
Oh, yeah, I've watched that new high and new low. I mean, like you mentioned, sometimes it'll get you in trouble, but many times, it's an indicator. But you have to stop and think. I mean, how can you have new lows when you've got the stocks going up, 23 out or 22 out of 25 days? That's just, but it's the Dow, and, the Dow's only 30 stocks, and they're certainly cap weighted. And with, Goldman Sachs, being the leader of the pack there, you can certainly see why the Dow could be a leader. Now, you've
I
Go
put
ahead.
in the previous letter that an article in the Wall Street Journal said that only 5 stocks were covering 81% of the rally this year by the end of October, I think it was. So the 5 did not include Goldman, but since the election, Goldman has been up over 30%.
Yeah, Goldman's had one heck of a run. I mean, I just look at that stock and I said, wow, it goes from 195 to 255, almost like overnight, it seems like, for sure. Sam, we wanted to congratulate you on, picking the winner of the election, because if you remember, you were back in October, we had you on, and you thought that Trump was going to win in a landslide, and it certainly turned out that way. So congratulations on that.
Thank you. I was one of the few that correctly predicted that the Brexit was likely also, but the astrology was really quite specific in that on the 9th, it says, early today, Mars semi-squares Saturn and the ascendant, while Moon conjuncts Neptune, everyone thrown into doubt and confusion. That's the early morning of the 9th. Sad social conditions, general limitation of activity, bankruptcy, depression, and suppression. Markets lower and lower, and that was the night that it went down to 35. But then the astrology called for bereavement and mourning the following week, and there were I didn't see any big name things about death, but there was plenty of mourning. I couldn't believe it.
Oh, yeah, I was thinking of you because when that was happening, I was watching the people crying. But it was one of the most emotional elections we've ever had because it was such a huge surprise. I mean, it caught a lot of people, certainly off guard. We're going to come up to a break here in just a little bit, Sam, but one of the things that we want to cover on the next segment here is about the oil market, because we're having a tremendous, what appears to be a breakout in oil above $52 a barrel. And
I saw
certainly
that this morning.
Yeah, that's what caused these markets to gap up last night. They gapped up in Germany, and also in Hong Kong, and also in Hong Kong didn't gap up very much. It was very slight, but Japan. It was all related, because as soon as the oil jumped, the futures and everything just started to follow along. But of course, the futures gave it back up, but the oil has held up pretty good. But we do want to discuss this, when you come back, because this could be a tremendous, this could be a really big event both ways, whether it fails or not, or also if it continues to go. So it's going to be very interesting. We'll cover that when the break should be coming here any minute now.
What touched it off?
Yes, it was we'll discuss that when we get back, Arch. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we were talking with Arch Crawford of Crawford Perspectives. And Arch, Byron Tucker, who's one of my dearest friends, he's interested in this oil market because he has some friends from Saudi Arabia. And he knew that these non-OPEC members were meeting on Friday to discuss whether they were going to, cut back production. And they decided that late Friday afternoon at, after all the markets had closed. And then, of course, Sunday night, that was the reason for the gap. It was an extra 500,000 barrels being taken out of production. So that's, at least that's what they're saying. That's what the gap was. It could be because, Trump had scrambled eggs for lunch or something, the way anything could make these markets move. But, what do you think about this break that we've had now? I've noticed you have a really great chart here in oil, and it's broken above that $52 a barrel level. Now, it has to stay above there for it to be a valid breakout, doesn't it?
Yes. It is a spike up, which can be false. If they actually going to go through with this, it could be a good break. The charts look much better on the weekly and on the monthly, but the monthly is the 200-month moving average is right here, right now. So it could pull back a bit, even if it does go up later. On the resistance area, it's 63 about on the 200-day moving average, I think. And the weekly is about 70, close to 70, or maybe even a little above 70. So those are the resistance points, and we'll see if we'll stop here at the 200-month, or if it can get seriously above that. But the only things that are up on the MACDs, even with this new highs in the market, all of the major indices are on MACD sells. Even the TNX, which is the interest rate on the 10-year, and that's up to 250, just hit a new high for the move. The MACD is still on a sell, so the momentum although on a new high, is slower. Now, the only things, the positive MACDs are the oil and the gold, which means this is even while the gold is making new low, it's making it on a much lower momentum. So I think they're waiting to see for the FOMC move, and that the big thing will be inflation soon. from heavy deflation for several years now.
Yeah. You remember the days back in the late 70s when we had 13% inflation and Carter brought in Paul Volcker, and now look how things have changed in 32 years. They want a little inflation.
Well, the interest rate has been steadily lower since then in a very, very tight trend channel.
It certainly has. Sam, one of our listeners has asked us a question here about this golden cross indicator that you have on your oil chart. Do you want to take a minute or so to explain what you're looking at here?
The golden cross?
Yes, you have that on your oil chart. Yeah.
Well, on the daily, we had that back in May, where the 50-day moving average moved above the 200-day moving average.
Okay.
So it's been in a somewhat positive mode since then. Of course, back in August, we did break below the 200-day moving average, but it was a fake-out move and only closed below it 2 days, and then it spiked back up. And it closed below it recently in about the 11th or 12th of November, it looks like. Mm-hmm. So those have been back. Then it went up to, 49 maybe, pulled back down exactly to the 200-day moving average, and then did this spike up. So the 200-day moving average has signified the lows by breaking a day or 2 days or whatever, and then turning around and running up. So again, the MACD is positive. I haven't checked many other commodities, but both the gold and the oil going positive on the MACDs, which means, the oil has confirmed it by hitting a new price high. The gold has not yet, because it's still hit a lower low this morning, and we're waiting to see if that can actually turn to follow the MACD, which is just a momentum indicator if you're not familiar with it.
Okay. What we're going to do now is we're going to switch over and talk about the gold market a little bit, if we could.
All right.
Go ahead. What do you think about right now? What do you think of the gold market here?
Well, that about the MACD is a more positive thing about it, but the most negative thing about it is that India has the biggest importer of gold has said you can't do that anymore to their people. I know that. And that's scary. So I'm waiting to see if we can get any technical confirmation. I wrote in the letter two letters ago that I would be uncomfortable holding it, trading positions under 1290. So I got out in the newsletter with profits on the trade, which was not an actual trade. It was a recommendation.
Okay. Sam,
and I'm waiting for some more technical indications of the turn, and maybe we'll get it with the inflation numbers next week. Mm-hmm. That's this week, isn't it?
Is there any indication, Sam, that you're hearing from people in India, whether they're enforcing this thing on gold, whether they have it? I mean, are they being, is it being confiscated? Are they being arrested? I haven't seen anything on the news about it.
When this thing happened about denying the two top paper currency values, there was an article about it on page 12 of the Wall Street Journal, which didn't cover very much. Zero Hedge had a fantastic article with pictures and everything, and I went back to find that, and it looks like that article has been denuded. So I think maybe there's some ban on that unless you can find that original article. I couldn't find it.
Yeah, well, it's amazing. Yeah.
But it's the fact that it was on page 12 in the Wall Street Journal, and I think it's the biggest thing happening in the world
Well, it
right
certainly
this
is in the
minute.
gold market, that's for sure.
But I mean, it's a further indication that started with what was it, Ceylon, and then continued to Greece, and now to India in terms of much greater intrusion by governments into currencies and
Okay,
bonds.
Sam, we got to take a little break here. Stay with us, and we'll talk a little bit about how the folks can reach you, okay?
Okay,
We'll be right back. Yeah.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're on with Arch Crawford of Crawford Perspectives. Arch, could you tell the folks how they can reach you if they'd like to see a sample of your newsletter or get in touch with you?
First, I'd like to say that there was one other thing other than the oil market breaking up, and that's Shanghai breaking sharply lower this morning, and that's broken. You remember the biggest down moves in our markets have been when something unexpected happened in the foreign markets, except for our election, was the only thing that took it down with news from here. But everything else was, the first big one was, I think, Switzerland changing, and then China changing. So we've got China breaking down this morning, and it could be very important. And to find me, I think the easiest is to Google Arch Crawford.
Yeah.
It'll bring up the website on the first or second entry. And the phone number is 520-577-1158, and the email is crawfordperspectives@earthlink.net. So as I say, it's easier to call up the webpage.
Sure. Well, listen, I want to wish you and your lovely wife, Joanna, happy holidays, my friend, and we'll have you on after the first of the year if you'd like to come on.
Okay, we'll be back by then.
Okay, pal. Travel safe. It's a jungle out there.
I've noticed that. It's a very strange time we live in, but it's certainly interesting.
Indeed it is. Thanks again, Arch. We really appreciate it.
Okay, bye to all. Have a happy New Year.
Bye-bye. Okay. Okay, folks, keep an eye on the markets very, very closely, especially the euro. That's the key. If we get below 105, it's big-time trouble. But right now, it's rallied over 100 pips since early this morning. So it's got a chance here of some type of a movement. But we've seen these before. These 100-pip rallies fail very quickly. So that's it.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.